Welcome to DebtCircle Key Roundups. I am Vijendra.
And I am Leela.
Today, we have some important updates in the world of finance and debt markets. First up, Hero FinCorp is accepting bids for its 2-year bonds, signaling an interesting move in corporate borrowing. Meanwhile, the 10-year bond yield has fallen as crude prices ease, affecting investment strategies and market sentiments. And finally, the NSE has settled pending SEBI cases for nearly 1,500 crore rupees, which has significant implications for regulatory enforcement and market confidence. Stay tuned as we break down what these developments mean for investors and the broader economy.
Hero FinCorp accepted bids totaling 3.25 billion rupees for a 2-year bond issue with an 8.40% coupon, fully subscribed on July 30th. The full subscription at this coupon shows robust investor demand, aligning with Hero FinCorp's strategic funding goals.
The bond's AA plus rating from ICRA and CRISIL reflects strong credit quality, making this issue attractive amid current interest rates. This issuance strengthens the corporate debt market by adding high-quality short-term paper with a competitive yield.
Let's move on to our next article. The 10-year government bond yield in India opened at 6.8061% on July 31st, down from 6.8132%. A stronger Indian rupee and easing Brent crude prices helped improve market sentiment ahead of the government's plan to raise rupees 34,000 crore through fresh debt issuance.
That easing is significant, Vijendra. The rupee's appreciation by 29 paise against the US dollar and crude oil prices dropping to around $88 per barrel are easing inflation worries. This supports stable bond yields and signals cautious optimism before the Reserve Bank of India's upcoming policy review.
Brent crude fell by 1.88% overnight due to reduced supply disruption fears, especially after Saudi Arabia announced plans for a maritime security coalition. This decline directly contributed to the bond yield easing, reflecting improved market confidence.
Exactly. The Reserve Bank of India is expected to maintain current policy rates with a neutral stance, aligning with the US Federal Reserve's hold on interest rates. This stability further bolsters investor confidence in government debt instruments.
Let's look at another key development. The National Stock Exchange has secured in-principle approval from the Securities and Exchange Board of India for a settlement of 1,491.21 crores related to past regulatory violations. The settlement includes an additional 714.74 crores demanded 14.74 crores demanded by SEBI, added to the rupees 776.47 crores already paid by NSE.
This approval clears a major regulatory obstacle, smoothing NSE's path for its initial public offering, which is critical given past governance concerns linked to co-location and dark fiber cases. Market confidence should improve as this resolves long-standing issues, allowing the exchange to focus on growth and transparency ahead of its public listing.
Now let's discuss another important development. India's formal retail credit penetration doubled from 35% in 2017 to 74% in 2026, with the credit-eligible population growing from 79 crore to 89 crore. The geographic spread has expanded from western and southern regions to northern and central states, with Uttar Pradesh's share rising from 8 to 11% and Madhya Pradesh and Bihar also increasing notably.
This surge reflects deeper financial inclusion, especially as consumption loans like personal loans and credit cards now dominate, rising to 51% of credit-active consumers, shifting away from traditional asset-backed borrowing. Plus, the borrower profile now includes more women, younger people under 35, and semi-urban and rural consumers, highlighting a broader and more inclusive credit market across India.
Let's look at another key development. NIIF Infrastructure Finance accepted bids worth rupees 5.5 billion for their 5-year bonds maturing in August 2031 with a coupon rate of 7.88%, priced at a yield of 7.936%.
The bonds carry a AAA rating from ICRA and CARE, signaling strong creditworthiness. This high rating, combined with the slightly higher yield, reflects robust investor demand for secure infrastructure debt in India's market. This activity highlights ongoing appetite in India's debt market for well-rated, infrastructure-focused instruments, supporting the sector's financing needs effectively.
Moving to our next story, the Indian rupee strengthened by 29 paise to open at 95.39 against the US dollar on July 31st, reaching a 3-week high. This was driven by the US dollar's sharpest decline in 3 months and continued intervention by the Reserve Bank of India.
That dollar weakness stems from softer US economic data, with second quarter GDP growth at 1.5% below expectations and a hawkish but paused Federal Reserve. The rupee's rise also benefits from crude oil prices easing, though Brent crude near $90 per barrel still limits gains due to India's high import costs. Market support near 95.50 to 95.60 could hold, allowing the rupee to test 96.80 to 97 if crude prices and tensions keep risk aversion elevated.
Let's move on to our next article. The Reserve Bank of India has extended the deadline for banks to implement differential interest rates on bulk deposits to October 1st. Banks must now disclose rates for deposits above 3 crores rupees online by 10 a.m. each business day, with a 10-minute grace period. RBI rejected extending runoff rate pricing to deposits below 3 crores rupees, citing complexity concerns.
This extension gives banks more time to align with the liquidity coverage ratio framework, which differentiates runoff rates for retail and non-retail deposits. That means banks must maintain clear classification systems to manage liquidity risks, as retail deposits have lower runoff rates and wholesale deposits carry higher liquidity costs.
Moving to our next story, Haryana's MSME policy targets 55,000 crores in manufacturing investments and aims to create over 500,000 jobs within 5 years. It includes 60 initiatives to double exports, focusing on financing, technology, and green manufacturing. Export incentives are also boosted with a 3% interest subvention on export credit capped at Rs 10 lakh annually and export freight assistance raised to Rs 30 lakh per unit.
That's significant. The policy's capital subsidies range from 15 to 30%, and a Rs 200 crore venture capital fund will support startups. These measures will enhance competitiveness and ease of doing business, encouraging automation with up to 25% support on project costs for robotics and IoT. Now let's discuss another important development. GMR Group's 2 units plan to raise a total of 50 billion rupees through rupee-denominated bonds in the next 2 to 3 months. GMR Airports will issue 15 billion rupees in 3-year bonds, while Delhi International Airport Limited will raise 35 billion rupees via 15-year bonds with a call option after 5 years. This move helps refinance DIAL's $523 million bonds maturing in October, shifting from foreign currency to rupee borrowing, which is more aligned with their revenue sources and reduces currency risk. Notably, GMR Airports last raised 15 billion rupees in August via 18-month bonds at 10.35% yield and 3-year bonds at 10.50%. Let's move on to our next article. The Securities and Exchange Board of India has approved a settlement of 1,491 crores with the Securities and Exchange Board of India, 191 crores with the National Stock Exchange, resolving a long-standing dispute over co-location and dark fiber issues that blocked NSE's IPO for almost 10 years. NSE's IPO draft prospectus shows a potential raise of Rs 29,780 crores, making it the largest in India's history. This clearance is crucial, as it removes regulatory hurdles, allowing NSE to proceed with its initial public offering. Major shareholders like State Bank of India and Morgan Stanley plan significant share sales, and with 20 investment banks managing the offering, it signals strong market interest from both domestic and international investors. Here's another significant update. The Reserve Bank of India sold approximately $7 billion last Friday to support the rupee, which had weakened to 95.7437 per US dollar, nearing its all-time low. India's foreign exchange reserves rose to $676.2 billion by mid-July, boosted by capital inflows of $32 billion from banks. This intervention came as part of a broader Asian trend, where central banks defended currencies amid rising crude oil prices, which strain oil-importing economies like India. These increased reserves and policy measures demonstrate the RBI's commitment to rupee stability despite external pressures. Here's another significant update. LIC Housing Finance's net profit rose nearly 10% year-on-year to 1,499 crores in the first quarter, despite net interest income increasing by only 0.6% to 2,087 crores rupees. Shares dropped 2.21% to 541.2 rupees on the National Stock Exchange, indicating investor caution about future lending income expansion. That suggests their profitability isn't just from core lending, likely coming from cost control, recoveries, or treasury gains. Diversified income and efficient cost management helped now, but sustained net interest income growth remains critical for investor confidence and stock performance going forward.